Morning, everybody. It is the 22nd of Feb, Wednesday. The big corporate announcement we had this morning is from Lloyds Bank. It announced pretty good results. Profit last year was up to about 4.25 billion, up from 1.64 billion the year before. It ever so slightly missed the consensus, but it was near as damn it there. Total income was ever slightly down as well, but still very healthy. And net interest income, that's the money it makes from lending money out, dipped ever so slightly, but again, it was pretty good. Although it could do with the banks could do with a rate rise or two in the not too distant future, just so they can sort of get back to their most traditional and simplest way of earning money from lending it out. So it also announced a special divvy, half a p a share. I think a lot of people are actually looking for that, so it's good that they delivered it. So the initial divvy, 1.7p per share, and they've announced an extra half a p, so 2.2 per share for Lloyds. And their Tier 1 core capital ratio, which is the money, this is the sums, the thing that comes from the stress tests that they need to keep in case of any economic shocks, etc. That stood at a very healthy 13.8% as well. So all looking good for Lloyds Bank. If you're sort of following the trade I did or doing a similar trade, I bought a load of calls for 3p. So they're about 4.5 or 5p now if you want to sell them. I'm going to keep these for the time being. See if there's some more follow through on this. It's been in this very narrow consolidation range for the last few weeks. This is daily Lloyds charts. As you can see, it's gapped up. That's a pretty bullish sort of signal. It's off its highs at the moment as we speak. It's up about 2.5p at the moment. It has been up. Just about touched nearly 70p. So we'll see how it goes. It's not going to be the simplest thing. It's got to get through really this sort of 70 to 73p area. There's still 4% of Lloyds that's not publicly owned. Obviously, that's coming down and down and down. But the government's break-even price has been about 73p. So this is 70. Any sort of the 70 to 73p area has been a lot of price action, a lot of trading taking place in this sort of level. And then looking at it in a more broader sense, the market has sort of pivoted up and down around this level. So it's been key support all along here. I mean, this was when the investment banks who are working for the government were just selling off small tranches, dipping it in. Obviously, it fell down here. There was the problems in China, etc. And then there was the worries about Brexit, which seem to have subsided a lot now. So I think the rest of the government-owned shares will, whether it's just by investment banks selling it or whether they do go back to what they were planning to do, which is sell some to the public at a discount, I think they'll be gone. I would imagine within the next few months, certainly by the end of the year, I would think. So we shall see how it goes. As I say, this is a key area. There's been a lot of price actions here. There's a lot of fundamental reasons why this is a very important level. So we have to see if it can get through. And if it can, it should be a bit more upside ahead for Lloyds. The other big riser this morning is Barratt Developments, home builders. It's a bit off the top now, but it announced very good results. Again, it seems the doom and gloom predictions about Brexit have been very, very wrong. It's a bit off the top now, but that gapped up above this sort of £5.25 level. I don't really trade this one, but it's the biggest UK home builder, and just like Lloyds is the biggest retail bank in the UK as well. they're sort of, I see them as good sort of bellwether stocks as to the state of the UK economy, and things are looking okay at the moment. Back to the FTSE. I can't make my mind up with the FTSE. I mean, I would still think it will go up a bit more. It's really struggling at 7,300. It struggled again this morning at 7,300. So, I mean, we need a positive close above this level, but I would still put my money on them being a little bit more upside in this. So, if you're doing the trade with the calls, they're getting fairly close now, both in terms of time and price. I'm just going to hang on a little bit more, and if we do break 7,300, I think there could be a little bit more upside to come. There's plenty more results out this week, so one or two good more corporate releases, and that could push us over. The other one I'm really watching is HSBC. It goes ex tomorrow, so if it goes ex-div tomorrow badly, I'm going to sell some puts on this. I was quite tempted to sell some this morning, but I'm going to hang on another day and see what tomorrow brings in this. Just as a note, I just checked this and looked at the September £6.20 puts. They're about 35p to sell. So there is a couple more dividends before then, though, to bear in mind. So that needs to be factored into the price. So we'll see how HSBC's goes ex-div tomorrow. And yeah, that's about it for today.